Hello, I'm John Lavin, an SNSD from Philadelphia, Pennsylvania, and I'm thrilled with the training that you're about to watch. We've worked so hard for so long to build an incredible business, and there's a piece of that business that I learned early on when I learned the business in 1981 that I felt over the years has been missing, and that would be mastering the art of getting quality referrals. Referrals from potential clients and referrals from potential recruits. When I started, I had the privilege of learning the Bob Safford referral system. I learned it when I was 23 years old. I had no market, and I wanted to be full-time. Without referrals, I would not have been able to go full-time and stay full-time. You're about to hear from some of the top people in our organization and how they use the success system and their kitchen table presentation to obtain quality referrals. Contact those referrals, see those referrals, and get more referrals. Anthony Hines, Jackie Ashford, and Khalil Marcano are going to go through the different pages of their presentation, and you're going to be able to watch them over and over and over again. You're going to be able to learn the questions they ask. You're going to be able to see how they communicate with the client. You're going to be able to see what we call a referral hit. And you're going to see 3, 4, 5, and in Anthony's case, there are 7 times that he's going to mention and talk about obtaining referrals and why it's important for people to introduce us to the people that they care about most. You're getting ready to be in a position to take a page from the presentation and watch it with your team over and over again. You can script it out and watch it with your team, practice it together back and forth, and have somebody up in front of the room so that you can watch them do it and critique them. As a team, you can master the art of getting referrals, qualifying those referrals, and then calling those referrals. You get the closing questions that you'll need, you'll get the phone scripts that you'll need, you'll get the text messaging that you'll need. Everything you'll need to build a business utilizing referral system is now going to be available to you. So enjoy it, take notes, watch it over and over again until you master it. Good luck.
So now let's talk about setting the stage to a great presentation, okay? So you wanna make sure that when you're sitting with the client that you sit in a position where the client is not looking over your hand to see what you're pointing to. You wanna make sure that you properly sit them. It'll always depend on whether you're left-handed or right-handed. See, I'm right-handed, so what I like is the clients to sit on the left of me, so as I'm pointing, my hand is coming across and they can read and follow my finger going across the screen, okay? Then when you start, you know, if they offer you a glass of water, always accept it. You never know, they might be the type real relationship oriented. They might be offended that you didn't take their water. So always accept whatever beverage that they offer you to drink. Make a little conversation, compliment them. Ask them about their family briefly. Ask them about their work. Find out whether they enjoy what they do or not and whether they see themselves there long term, okay? And then you want to start the presentation. You want to set the stage. You want to also make sure that the trainee is not sitting on the other side of the screen, right? They didn't just show up there to watch you close. If you're really interested in training and developing them, you'll have, wherever you have the client sitting, you'll have the trainee sitting behind them so that all 3 parties can actually see your screen. You see your presentation. Does that make sense? Okay. And the way I start is I say 1 of 3 things generally happens, if not all 3. And I know you need to see it first, but at the end of the presentation, if you fell in love with the financial education, is there any reason you wouldn't refer me to your friends and family? Okay? And normally I get a no there. No, there's no reason I wouldn't refer you. And the reason I worded that way is because I used to say, if you love what we do, is there any reason you wouldn't refer me to your friends and family? They would say, I need to see it first. So now I'm dealing with the objection up front. So I'm going to say, I know you need to see it first, but at the end, if you fell in love with the financial education, is there any reason that you wouldn't refer me to your friends and family? Now you're not going to get that no. They're just going to say, sure, I'll refer you. Oh, yes, I'm open to it. Okay, then you want to move on to, now, if the financial education put you on a better track financially, is there any reason you wouldn't take advantage of our services? And they should also say, no, there's no reason, I'll be open. Okay, and third, this may not be a good fit for you, but we're looking for some people full-time part-time. We're going through a huge expansion. And if you happen to know someone that'd be a good fit for our company, is there any reason you wouldn't point me in their direction? And they should say no to that as well, okay? So I phrase things in a way that it'll kind of get the responses that I want to get. So please word it and phrase it that way so you can get the responses that you want. And in my opinion, you kind of set the stage, you get commitments up front for possibility, and then it's much easier to get the business at the end, it's much easier to get the referrals at the end, and it's much easier to get those recruiting referrals also at the end, which are the most important ones.
So now I'd like to speak to you guys today about how to use the mission page. Typically, I like to use this page to just reinforce, the 3 things that I'd like to happen at the end of the kitchen table. But I also like to use the statistics here to reinforce why it's so important for the client to refer us to their friends and family. So this is typically what you want it to sound like. As I go through this presentation, I'd like you to ask yourself 3 questions. First is there a need for what we do? As we talked about earlier, my company is going through a major expansion right now. We're looking for some great people. There's a saying in business that if you can identify what people want and need and provide it to them, then you're going to have a great money opportunity attached. So if you really feel that people really need our products, they really need our services, then I think you'll agree that there's a great opportunity here to make money. The second thing I want you to ask yourself is, are the financial concepts helpful for you? And this is probably going to be the most important question that pertains to you guys tonight. The reality is, I want you to see if you really identify with the things that I speak to you about. And if you do, is there any reason that you wouldn't implement some of those things? Lastly, if your friends and family implemented those concepts, would they be better off financially? Hey, the reality is I know that most people, they don't want to feel like they're sick of a salesperson on their friends and family. So as I go through these things tonight, I want them to really resonate with you. And if they do, I want you to feel very, very comfortable referring me out to your friends and family, okay? Now, our mission as a company is to help families earn more income, become properly protected with the right kinds and the right amounts of insurance. We want to help families become completely debt-free so they don't owe anyone anything. And lastly, we want to help families achieve financial independence so they have enough money saved that they can actually retire with dignity. Would you agree that most people would love to have a financial game plan that accomplishes that for themselves and their family? Now, would you also agree that most people probably don't have that game plan right now? The reality is the statistics tell the story. For instance, more than 2/3 of families right now in the U.S. are living paycheck to meet ends meet. The average American household has at least 1 credit card and nearly $16,000 in credit card debt. Now, I usually get 2 responses to that. People usually see that and they say, my goodness, how can somebody have that much in credit card debt? And other people see it and they say, my goodness, how does somebody only have $16,000 in credit card debt? Nearly half of all Americans right now have less than $500 saved up. More than half of all people working have less than $25,000 set aside for their retirement. Now I want you to think about this. If you were rapidly approaching retirement and you only had 25 grand saved, how would you feel? Would you say that these are some pretty real and some pretty serious problems right now? Who is helping families with that? The reality is we're the only company out here that's helping families, and if you don't refer me to your friends and family, how are they going to get the help that they need to avoid all the things that we just discussed?
Okay, so this next page has a lot of referral hits, especially at the end with the 3 questions. So I'm going to do an example of exactly how I do the page and then talk about the referral hits at the end. So you start off, people don't plan to fail, they just fail to plan. Nobody wakes up in the morning with the idea to be 65, by themselves, dead broke, working at Walmart or Home Depot as a greeter. So nobody says that. The problem is most financial institutions just sell you products, but they don't provide you total solutions. So let's say this is you in the beginning, in the middle, and you have your life insurance, your mortgage, your bank accounts, 401ks, your credit cards, loans, everything. But they're never all coming over to your house and sitting down with you for free, all sitting around your kitchen table to provide a plan for you to become debt-free, financially independent, and properly protected. So where we come in is we actually do that. We provide all 3 things, everything that you have all together at the same time. And we do that with something called a financial needs analysis. What that does, it shows you exactly where you are and where you need to be. All down the path, a straight line. We take you by the hand and do that, and it's completely free. So it's kind of like a financial GPS. So let's say I was on my way to your house, and I said, I'm lost. I have no idea where I am. I have no GPS. What's the first thing you would ask me? Where you're at, right? So in order to do that, you have to know exactly where you are and where you need to be financially. Now, how many people today, Mr. and Mrs. Client, are completely lost financially? Everybody. So do you see the importance of referring us to them? Because without that, they would never really get the information. Now, there's three main problems. There's no financial education. Did you ever have a class on Money 101? How not to be broke at age 65 101? Now, have your friends and family also had a course in that area of personal finance? No. Now, have you ever had a financial game plan, a written step-by-step guide to become financially independent? No. How many of your friends and family would benefit from a plan that worked like that? All of them. We also have no financial coach. Mr. and Mrs. Client, did you ever pay for a financial coach? No. How many of your friends do you think have access to a financial coach? None. So you just agreed that, you've never had a financial education, financial game plan, or a financial coach. Your friends and family would also benefit from all three. Doesn't it make sense to refer us to them so they're able to get all three of those and we can provide that for them for free? Yes. So at the end, when you ask those questions to the client, they see the need, they see the opportunity for them to also give you referrals, and they're very open to giving you more people at the end of the presentation. So this next page with the FIN number page, there's a lot of referral hits you can do on this slide as well, because a lot of people have no idea about their financial independence number. And it's important to get them to understand that to refer you to more people. So you start off by saying, Mr. and Mrs. Client, do you know your FIN number? Do you even know what a FIN number is? I didn't even know what a FIN number was before I came into the company. So let me ask you a question. When would you like to retire? A lot of times they say 65, and when you say that, you say, a lot of people retire 65 thinking they're getting a pension, Social Security, and savings. Now, pensions aren't really offered anymore to new people, and our country's at a negative savings rate. So retirement is no longer an age, it's actually an amount. So that amount is your financial independence number. So it's the amount of money that you have to have saved up so you never have to work again unless you wanted to. Now, how many people actually know their financial independence number? Hardly any. It's very scary because we're all basically running a race. We don't even know where the finish line is. So in order to pretty much illustrate that, you just say, if you want to retire in 30 years, having about $30,000 a year, 30 years from now, because of inflation, that 3% inflation, it's actually going to be $73,000 that you would need a year, but $33,000 does today. So in order to get there, you have to save about $585 a month for 30 years at an average rate of return 9% to hit $1,080,000. Now, how many people do you know are going to have $1,080,000 at retirement? Not many. How many people do you know even know that they need that much to retire? Not a lot. So that's the importance of actually knowing your financial independence number, exactly how to get there, and using us as a financial coach to guide you in that way. How many people are teaching people about these concepts? None. Did you ever know about this concept before I even came over to your house today? No. So that's the importance of referring us to more of your friends and family so they have the opportunity to learn about their FIN number and exactly how to get there in a written step-by-step game plan. So this is one of my favorite pages, the theory of decreasing responsibility. And this is the foundation of the company. This is basically how life works. So in the beginning of the page, I want to ask them a question. Mr. and Mrs. Client, what's the need for life insurance? Do you think you need life insurance for your entire life? Usually they say yes. So you want to ask them then, what's the purpose of life insurance? 9 times out of 10, they say burial. And you say, well, it's actually income protection. So let's use an example. Let's say that you're sitting in a home and it's a married couple. So let's say that they both bring in about $50,000. Okay, together it's $100,000, takes care of the kids, lifestyle, bills, everything. Now, if one of the spouses dies, how long is $100,000 of bills gonna last on just a $50,000 income? Not very long. So life insurance brings it back to $100,000, usually to the youngest child is 23 and out of school. Now, single people really need it because they don't go from 2 incomes to 1, they go from 1 income to none. So they really need life insurance. So in the early years, you may need a lot of coverage, but the later years you don't. In the early years, you might not have a lot of money, but the later years, you better have money because you can't go to the grocery store, get medication, go on vacations with life insurance policies. You need money. Now, when you're older, do you want a lot of money or a lot of life insurance? They always say a lot of money. Right. So in the early years, today you have young children, you have high debt, house and a mortgage. The loss of income would be devastating. And at this part of the presentation, I really want to disturb them. So I look them in the eye and I say, Mr. and Mrs. Client, if you died today, how long would your monies last your family? Not very long. Correct. So that's the need for there's a very high need for low-cost term life insurance in the early years. Now, in the later years, your responsibilities go down. Your kids get older, your house is paid, your debt is lowered. So as your responsibilities go down, your savings should be going up, but most people don't. So let's say that you're 70, your kids are grown, your house is paid, your debt is lowered, you're 70 years old, but you didn't save any money. Do you need life insurance? Yes, a little bit to bury you. But let's say that you did save every single month consistently, you followed our coaching, you're 70 years old, the kids are grown, the house is paid, your debt is lowered, you're 70 years old, but you have $500,000 to $2 million cash. Do you need life insurance? No. At that point, you're self-insured. And that's exactly what we teach with Primerica. How many of your friends and family would benefit from something that worked like this? All of them. How many people do you think know anything that works like this? A lot of your friends and family have, life insurance for their whole life, right? Yes. So what life insurance company do you know teaches people how to completely eliminate the need for life insurance? None. So that's what we do. We're not focused on just the selling of life insurance. We're focused on the total picture for the client, getting them out of debt, helping them save money, everything. A lot of people don't like us for that, but we don't care about that. We're here to help the client. And you see the need to help and to refer people to us so they actually have a chance to do this as well? Yes.
So, guys, the way I like to use the rule of 72 is obviously I love to explain this concept because it's a core concept and a core principle that we teach at Primerica, but it's a really great opportunity to reinforce or solidify a commitment from the client to give you referrals. The reality is when we do our presentation, the rule of 72 usually comes after having covered concepts such as the statistics and the great need that there is for our financial products and our financial services. It usually comes after us teaching the client about their financial independence number, a concept that goes unknown to most folks. So by this time, you've already built up some momentum of education, and you've built up some momentum of referral hits at this point. So I like to use this page as a place to get a stone cold solid commitment that at the end of the presentation that client is going to really be open and really committed to referring me to their friends and family. And here's how I like to do that. So I'd say, hey, Mr. and Mrs. Client, the next concept that we're going to discuss is the rule of 72, and it's often known as the banker's rule. Have you heard of this before? Well, it's a really simple financial concept. It's a really simple math concept that teaches us how money doubles, okay? So before I actually tell you how it works, here's what I'd like to do. I'd like to play a little game with you, okay? So let's pretend for a second that you're 20 years old, all right? How does that feel so far? All right, it's a good game? Great. So let's say that I gave you $10,000. So you're 20, I'm giving you $10,000. Now, the reality is most 20-year-olds, what are they going to do with that money? Right, they're going to spend it. They're probably going to do something completely other than save it. So here's what I want you to do. We're going to invest the money. And let's say that we put this money in a bank account that's earning 3%. Now, I know that there's no account right now that's earning 3% necessarily at the bank in a savings or CD, but let's say over time, after interest rates went up and down, over a long time, it averaged out to be 3, okay? So what I want you to do is take a guess how much that $10,000 investment will have grown to after 48 years, okay? Now, I know I didn't tell you how to figure out the rules, so it's not fair, but I want you to take a guess. And then I'll show to them that it'll grow to 40,000. And they're usually very, very surprised at that point. I've heard guesses anywhere from 12,000 to over 2 million. So it's very surprising, what people will get out of this. And then I'll just simply say, okay, let's do some quick math. I want you to guess again. Let's say we double the interest rate to 6. What will we have now in 48 years if we double the interest rate? And they'll just automatically say 80,000. And then I'll show them 160. I'll say conventional thought tells us that if we double the interest, we get double the amount. But the rule of 72 actually says we end up with 160,000. So here's what the rule says. The rule says you divide your interest rate into the number 72 to find the approximate number of years it takes for money to double. So if you're earning 3% on that account, well then 72 divided by 3 equals 24. So that means it'll take your money 24 years to double. Now, if you double that, if you go to 6%, well, 72 divided by 6 is now 12. So that money's doubling on average every 12 years. Now, here's the thing. Let's say that you had a vehicle that allows you to average a 12% return on your money, okay? Well, in that case, 72 divided by 12 is now 6. That means your money's going to be doubling on average every 6 years. Now, I want you to think about this. What do the banks do with our money when we save our money at the bank? They loan it out to other people with possibly very, very high interest rates, but how much do we get back? Now, it's not uncommon that we would, have an account growing at 1%. So if we did, then 72 divided by 1 is now 72. And that would mean on average that your money is taking almost 72 years to double. How do we win the money game if we're never taught the money rules? Do banks have any incentive to teach us these things, or would they rather profit from our ignorance? Now, I want you to think of one good reason so far, based on all of the concepts that we've discussed, that you shouldn't refer me to every single one of your friends and family. So, by the time I'm done with this presentation tonight, then I wouldn't have any challenges with you referring me out, right? That's how I like to use the rule of 72. So if you give them a referral hit like that at the end, they're going to be very, very crystal clear that what you do is valuable, not just based on the products and the services that we provide, but the education that we impart to them that's going to allow them and assist them in achieving all of their financial goals and dreams. I hope that helps.
So in conclusion to everything, what we do is show families how to build a strong financial house. And we use the same concept of building a real house. If we were to knock your house down, Mr. and Mrs. Client, and we were to rebuild your house over again, what is the first part of the house we start building with? And the client normally says the foundation. Now, if there's a crack in the foundation, what will eventually happen to that home? And they say, well, it's going to fall. Now, we're not building a real house, we're building a financial house, but we use the same concept of building a real house. And what that means is we're going to start building your financial house with the foundation. And the most profound part of the foundation is life insurance. Because if you die without life insurance, you can't come back to life, buy life insurance, and then re-die to leave your family properly protected. Does that make sense? And would you agree that more people are dying today than retiring today? See, the reality of it is that dying tomorrow means you hit the retiring tomorrow means you hit the lottery overnight, because you need at least $1 million to retire comfortable on, right? But people are dying every single day. So that's why life insurance is the most important part of the foundation. There's a gentleman in my office that I trained that we're very good friends. His name is Khalil Marcano. He's a first-generation American. His father died when he was 15 years old of a heart attack. He grew up in Brooklyn, New York. And within a few months, his electricity was cut off. The home was foreclosed on. The family only owed $25,000 on a home. They moved to Philadelphia because the cost of living is obviously a little cheaper in Philadelphia than in New York. And even then, his mother was still evicted 4 different times. See, when you die without life insurance, it could set your family back a generation or 2. It could also split up your family. It's very, very, not just emotionally hard, but it becomes very financially hard as well. So you don't want to set your family back a generation or 2. Does that make sense, Mr. and Mrs. Client? And they say yes. Okay. So then once we have that foundation properly laid, then we want to move on to building up a budget and emergency savings and a will. Okay. Now, why a will? Because if you don't have a will, then the government has one for you, and it's called they get to choose who gets your home, who gets your mortgage, who gets your kids, and it could be a family member that you don't want to get anything. Okay. We want to make sure that you have a good budget in place and that you have an emergency savings. Because if we skip this part of the house and we move on to paying down debt, because, I once had a client say, Anthony, my debt is like financial cancer. It's eating me alive. So when my debt is under control, I'll start working on the foundation and everything else. And I said to the client, exactly what you're trying to avoid is what you will create. So you'll be so focused on paying your debt down, and it'll go down because you're applying most of your money towards your debt. But then that emergency comes up. And when that emergency comes up, how are you going to take care of it? You're going to have to use your credit cards. And then what's happening to your debt? It's going back up, exactly what you wanted to avoid. So we need the emergency savings in place so that when an emergency comes up, you can take care of the emergency with your emergency savings. Even though your debt's going down a little slower, at least it won't go back up. Okay? Now, once we have that part in place, then we want to move to creating a structured step-by-step game plan to eliminate all your debt by specific date and time. We call that your debt freedom date. Okay? We're going to give you that debt freedom date today. Okay? And then we'll move forward towards then retirement savings. We want to make sure you're on track to hitting your financial independence number so you don't have to work through retirement. Okay? And then we're going to move on to college savings. Now I get some clients that say, whoa, Anthony, my kids come before me. So I think we need to drop college savings way at the bottom. And I say, unfortunately, not when it comes to your finances. See, if you have the disposable income to take care of all the prior things that I just mentioned, and you still have money left over to fund college savings, great. But if the budget gets a little tight, then you have to cut out the college savings. Because the reality of it is the kids can get scholarships, grants, and loans to go to college. Can you get a retirement scholarship, a retirement grant, or a retirement loan? And if you wait too late to begin saving for retirement, it gets to the point where it's almost impossible to catch back up. So we have to make sure we put retirement before college, okay? And then if you do have disposable income, we're going to help you fund the kids' college savings as well. And then we're going to move to top the house off for all your other goals and dreams, whether you want a bigger home or a newer car, or you want to travel, or you would like to help certain charities, you know. And unfortunately, most people build their house from the top down. See, the reality of it is people go get in debt first, they do the traveling that they shouldn't do, they buy things that they shouldn't buy first, and then they never build savings, they never get their foundation laid, and that is one of the top reasons that most people's finances are out of whack. So on a scale of 10, Mr. and Mrs. Client, how would you rate your desire to build a strong financial house and a crack-free foundation? And they say 10. Would you agree, okay, what's the most important part of the house? And they say the foundation, okay? And the reason I say that is I want to make sure that they were following along with me. I want you to imagine, what if you said, what's the most important part of the house? And they say savings. Well, it's going to be pretty hard to get them to start with the foundation. So you want to, so then you may have to go back and re-explain some things to them, because you want them to get that they have to build the house from the foundation up. Not the middle of the house, not the roof, but the foundation up. And when you get the right response, then you can move on to saying, was this financial education viable? They say yes. Would you agree that I changed the way you look at your finances? They say yes. Then you say, listen, Mr. and Mrs. Client, I'm going to crunch some numbers. I'm going to put together a plan for you. But before I actually, and then at that point, you're going to fill out, if you're a first-time closer, you're going to go into your questions so you can get enough information to recommend a plan to them. So you may need like their age, whether their children's ages, you may need to ask them some questions. So if you're a first-time closer, you know what you need to do, what information you need to gather, but you want to do that now, okay? So now you have the information you need. Then you say, Miss Client, as I was going throughout the presentation, you said at least 7 times that there's no reason you wouldn't refer me to all your friends and family. So I have a referral sheet for you and your husband, okay? Now, the record is for myself is 100 referrals. Now, I'm not expecting you to break the record unless you're competitive and you're welcome to do so, but the average is at least 30, okay? So if you don't mind filling up the page, that would be phenomenal. Okay, and there's 1 of 3 ways we can contact them. See, I follow the do not call list, so I don't want to call anybody that's not interested in me calling them. Okay, so I have a way for you to contact them. Okay, and there's 3 ways we can do it. Okay, but I only recommend 1. Number 1, you could call them. Unfortunately, they're going to ask you some questions that you won't be able to answer. And when you're not able to answer someone's questions, usually they become very discouraged and not interested. So calling won't be the most effective way for me to relieve them of their financial cancer and share this valuable information with them. The second way is we could email them. But unfortunately, most people have an inbox full of unread emails, so that's not a good system as well. Okay, the most mainstream way of communicating today is through text messaging. So I'm going to forward you a text message that says you sat with a financial coach who changed the way you view your finances, and it's a personal favor to you to accept a 2-minute phone call from me. Okay, so I'm going to forward you that message. Okay, and when you're done filling up the page at least, okay, with at least 30 referrals, okay? I want you to take that text message and I want you to forward it to each person that you wrote down. Okay, and also what I want you to do, there are some profile questions that are very important, right? Because if I go on an appointment, I'm going to bring different supplies with me with a 60-year-old client or 70-year-old client than I would with a 30-year-old client. So I actually need you to fill in their actual age. I know it says married or couple. Some people get a little confused by that. So to clarify, either whether they're married or live together with a significant other, I want you to fill out that box as well, okay? And if there's anybody you write down that you know that is very ambitious, that is not satisfied with their job, been complaining about their job, need more income, I want you to actually just circle their name, okay? So please fill out the sheet in its entirety. And again, I'm gonna work on a plan while you work on the referrals, okay? Now, if you're not a first-time closer, you're going to do whatever you need to do at that point to collect the data for the F&A or to schedule an appointment to go back and collect the data. And you'll follow your normal process. But this system can be implemented in whether you're a first-time closer or whether you're the type of person that would like to do a full data collect and then bring back a proposal for a total plan. Either way, you can fit this referral system in there. Now, if they then they fill out the referral sheet, you make sure that they sent the text message. And sometimes you have to be direct. Most people have jobs they're used to being told what to do. So if they say, well, do I have to send out the referral text now? You're going to say yes. Yes, I need you to do that now. If they ask, can they do it later? This is the reason you don't want them to do it later. They have children. They have a work life. There's technology. There's TV. They're constantly distracted. They will forget, and your referrals will go down the drain. And in business, you can't afford to take losses, unfortunately, not repeatedly. So you want to get to the point where you're able to look somebody in the eye and say, could you please do that now, because you know that they're not going to do it later. And you have them send out the text, and they usually say, okay, and they send out the text. And then people respond back, sure, great, excited. And then you just make the phone call, and you say something like, hi, Joe, this is Anthony. Mary asked me to give you a call. Did she mention my name to you? And if you call within 24 to 48 hours, they normally say yes. If they say no, you say, Joe, I apologize if I caught you off guard. Mary said she would call or text you and said it was okay to give you a call. Okay, but if you're busy, I can be very brief. Is that okay? Okay, so I sat with Mary. Mary is very impacted by a lot of the financial education that I shared with her. She said that you were the type of person given the opportunity to earn more income or enhance what you're currently doing financially, that you would definitely be open to taking advantage of that. Is that true? Say, excellent. Now, I want to put your mind at ease. I don't actually charge a fee to meet with families. I'm compensated strictly by the companies I represent and through quality client referrals. So if you fell in love with the financial education, I'll ask you to refer me to some friends and family. Is that fair? Okay? Therefore, would you be open to an exploratory appointment at no cost or obligation? And they usually say yes. Now, before we attempt to schedule time to meet, I just want to ask you some brief questions to ensure that I can bring some value, because I wouldn't want to waste your time. Is that okay? Great. Now, are you married or live together with a significant other? Yes. What kind of work do you guys currently do? I'm a police officer, firefighter. Okay, great. Okay, do you guys have children? They say yes. Okay, being as though you have children, do you have an independent life insurance policy outside of your job that you pay for each and every month? And let's say they say, yes. Okay, what's the name of the company? Okay, they tell you whatever name of the company is. Okay, excellent. Do you guys have any retirement savings with a previous employer? And they'll say yes or no, and you say, okay, great, okay. Now, are you and your spouse normally together during the day, evenings, or weekends? Let's say they say evenings. Okay, excellent, okay. I have Tuesday evening and Wednesday evening available. Which one works best for you? And let's say they say Wednesday evening, okay. 6 o'clock or 8-ish? Which one sounds better? 8-ish, okay, great, okay. I'm put you on my calendar. What part of the area do you guys live in? Okay, we live in the Philadelphia area. Excellent. What's your address? North Broad Street, blah, 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 blah. Okay, and they give you their address. Okay, excellent. So I have that in my calendar. Okay, John and Mary, I appreciate, you scheduling an appointment to meet with me. I take this very seriously, so I have that in my calendar. If something comes up on your end, could you be sure to give me a call with some dates and times that we can reschedule for? And if we can do that within 48 hours of our appointment, that would be a huge help for me. Okay, is that all right? Okay, excellent. All right, I look forward to meeting you guys on Wednesday at 6:30 p.m. If you have no further questions, I'll call you the day before as a friendly reminder. Or if you're the type of person that doesn't like calling and confirm appointments, you could just say, okay, can I consider this appointment confirmed indefinite? And they'll say yes, okay. So I won't call to confirm. I'll be at your door at 6-ish or 8-ish, whatever time you guys actually scheduled for. So here's the reality. When you're sitting with the client, what you want to say to the client is you know, to kind of sum it up, to bottom it out, to make it as simple as possible, is that when a client gives you 30 referrals, you're going to get at least 5 appointments. And those 5 appointments are going to give you another 30 referrals, which is going to lead to 5 appointments for each of those 5 referral lists, okay? That's easily 25 appointments. As you can see, that means there's a bunch of business in there to close. That means there's a bunch of money to be made. And if you paint that picture to the client in that way, they get it and they'll be more inclined to come with you because number one, what you're doing is valuable. You're making a difference in people's lives and they'll be able to see that it's also lucrative. Also, I don't want you guys to miss that, and I don't want you to think that this system is a sales system because it's really not. It's one of the best ways to recruit. See, if I don't have a new recruit to take me out in their warm market, the next best warm market is a happy client referring you to their friends and family, okay? Because guess what? You can use the credibility that they have, not to just get in the home to do business, but to also to get in the home to recruit them from the kitchen table. And they're referring you to 4 and 5 pointers, which are the best types of recruits. Married, homeowners with kids, working 25 to 55. Those are the best recruits. Why not use the credibility of your client to recruit those individuals? So build it big and I'll see you at the top.
Okay, everybody, you've just gotten a lot of information that you can go and study. And I want you to understand that if you add the referral system to massive recruiting, if you've got a great recruiting operation, if you're a double-digit recruiter, and you start giving people the tools so they can master referrals, your income potential is much greater than just having a recruiting system. You see, in our organization, we have recruiting and referrals. They are one and the same. They all work together. And when you could say to someone, we have a referral system that will teach you to have an unlimited number of places to go, that's actually your greatest recruiting tool. That's actually answering the question that a potential recruit asks, where am I getting my customers from? So when you teach them that by recruiting, training, and developing others, along with client referrals, when you add these together, you have a very powerful and potent system, and you can expand the new recruits' markets over and over again. So they'll have an unlimited number of places to go when they're done being trained. They can master their craft, and your organization is going to explode just like ours has. We are exploding. Our incomes are skyrocketing, and it's because we've mastered 2 things, recruiting and referrals. And we've just given you the referral piece, and I hope this helps you.